Okay, guys, if you can see me, can you just give me a shout out so that I know that at least we are all connected here? Just let me make sure that we are live at the same time. Great, great, great. Awesome. All right. So how's everybody's evening coming along? Well, so this is what we're gonna do moving forward every single week. I'll be coming on live to share with every single one of you a lot of the property updates, the trends going on, the insights that we as BC professionals and homeowners always wanted to know about property but don't have a chance to get access to. And that is why with this initiative, we're going to start having this to equip and empower more homeowners out there to know more about the properties movement, the different strategy, and as the market moves, what can we adjust it to our own favor as a homeowner for our own families, right? So I'll be doing this session every single week, and you can come in and to share maybe some questions that you have. So let me just take a look at the chat here. Great, just to make sure that we are live right now. Good, good. All right, so today what I'm going to really cover is I'm going to give you guys a quick case study about, how we have helped one of the homeowners to actually research in terms of property. So many of the times, as we know, we definitely have some ideas of what kind of properties we want to buy. And the moment when we start looking out to do the research, many a times we come short because of all the property gurus. There are so many different listings that are duplicates, or maybe they're even fake listings. So it becomes a very daunting task for a lot of homeowners to start searching for the right property to purchase. So what we do here in Singapore Real Estate Insider is we basically save you all the guesswork. Okay, we save you all the trouble, and we are the one that helps you to analyze the property from a data and research perspective to decide whether a certain property is worth to consider in terms of purchasing. So later on, I'll give you a case study of how one of this family, they reach out to us for a consultation because they are having some troubles actually going for and purchase their property and deciding whether that property ideally is for them or not. So later we will come in and share with you some parameters that we use generally to help our clients buy properties. So of course, later on, I will also be sharing with you lots of research, data and numbers, and give you a glimpse of how we actually do it. So give me a second while let me just share my screen here. Awesome. Okay, let's do this. Give me a second, yeah. Just making sure that, oops. Yeah. All right, so before we start, just want to make a disclaimer that every of the information that we put it out here, you also have to do a due diligence check as a homeowner, please. All right, because there are certain data, there are certain projects that we will highlight that this is for you. But of course, please do your own due diligence check as a homeowner to ensure that this property is ideal for you at the same time. All right, so I want to really give you guys a quick overview about the market. All right, as you know, property market changes very quickly. And that is the reason why we want to make sure that, hey, you are kept yourself up to date in terms of what is happening. So let me just give you a quick overview in terms of the different price in the different locations in Singapore. And if you're familiar with what we mean by OCR, OCR means the outside of central core, which means we're talking about generally the mass market. If you can see that over the years, the land prices in the mass market has already increased very, very much. From 2018 to 2019, they're averagely about $869 per square foot per PPR, and it moves on to 909. And of course, all the way to 2022, we are seeing at least 1,091 per square foot per PPR. So this is something that I want to stress for every one of you who are live here with me. Just take note that this is based on per plot ratio and it's not your normal per square feet. Okay, so this is a different calculation. This is for developers when they're buying land to calculate based on their per plot ratio and per pricing. All right, so how do we as homeowners use this as an estimate for us? How much will be the price in terms of per square foot? So a very simple calculation, because there's many different costs involved, right? Besides the land. Okay, there's also the what? Construction cost, right? There's also construction costs. Of course, there are also the various taxes that we have to include in before a developer will put out this property for sale, and of course their profit margin. So there are many different expenses and costs to factor into a land cost before it becomes a per square foot. So averagely, what you can do as a layman is you can just take this figure and you can multiply by 2. That should give you a good estimate about the property prices. Okay, this is how you can use it. So whenever you see newspapers come out, hey, per square foot per PPR, then what you can do is you use this as a guideline to help you determine what's the per square foot range later on. All right, so this is a very quick way to look into this. All right, so for those who have just joined us, I'm very glad that you guys are here live with me. So if you have any questions regarding property, do use the chat function to actually highlight what are some of the questions that you have regarding property, and also my session later on today. Okay, so this gives you a good idea about what is the mass market prices. And if we go to the city fringe, RCR is rest of city central. Basically, it's the city fringe around it. So we're talking about Tiong Bahru, Queensway, Potong Pasir, some of all these city fringe. So these areas you can see, even for the land prices, also has been increasing tremendously over the years. And till date, basically, we're looking at easily $2,500 per square foot, which is what we are actually getting right now for the city fringe, ranging from 2,500 to some of them even $2,700 per square foot. So why is it that we as homeowners need to know this? Because this gives us a very good indication to give you an overview about the general prices in Singapore before we even decide what we want to do, whether we want to sell or do we want to buy. You must have some sense about the prices going on in the marketplace. And whatever that you know maybe about 3 months ago or even 6 months ago is definitely invalid today because the market moves very fast. All right. So if you look at CCR, CCR means the core central region, right? We're talking about Marina Bay, Orchard Road, Bukit Timah, Holland, some of all these very prime area, District 9 and 10. Yeah, so you can see that even the land prices there has been gradually increasing. All right, from even 1,003 back in 2020, it has went up to 1,004, and then now we're talking about 2,000. So that's why it's no surprise that today, if you're seeing some of the property prices hitting more than 3,000 or even $4,000 per square foot in the downtown area, it's because the land costs keep increasing. All right, so with land costs increasing, there is no way for prices to actually come down. Does it make sense? All right, so today I also want to give you guys a lot more value. I want to share with you how we help clients spot properties. And when we talk about spotting properties, we're not talking about just based on budget, based on where you like, where you're familiar with. We are here to actually help you guys to base on 2 critical key points to spot safe entry property. Okay, there are 2 critical key points how we can spot to spot safe entry property in today's marketplace, especially with the high interest rate environment, the high price environment, economy, the cooling measures. How can we still successfully spot good properties? Meaning when you do it, when you buy it, you have a very safe entry, and even when you want to exit, you will also be very, very safe. So I just want to check with you guys, if let's say today, right, if you have given a choice, will you buy a OCR or the RCR property? If given a choice. Okay, generally, if let's say today we are saying that both price point. So where is OCR? OCR are the blue color one. Okay, blue color one are all the OCR. Okay, these are the OCR. And if you're talking about RCR, we're talking about the green color ones. Okay, green color ones, these are the RCR. So if today both prices are almost the same, okay, if let's say they're quite close, where would you usually want to go for? There's no right or wrong answer. We're all here learning. So share with me about what's your decision on buying a property if both price tags are very close today. Yes. All right. So as we all understand, right, if you're going nearer into town, am I right to say the prices are getting more expensive? So today, if both OCR and RCR prices are very similar, it's likelihood that we want to choose the one that is closer to town. Because why? Because there's more security, there's limited supply there, and if both prices are almost the same, you want to get nearer to town as much as possible. So later on, I'll be sharing with you a lot more based on numbers and data. Then you can have a better idea. All right. So let us see today from a guideline. If let's say RCR, which is city fringe, okay, city fringe area, today, if you are able to buy a property at about $2,100 plus per square foot, will you buy a OCR or RCR? So let us just study the numbers a little bit from here first. So you can see, right, for here, the prices averagely for the private property prices, right? For the blue color one, we are talking about the core area. You can see that the core area prices has already went up close to $3,000 per square foot. Okay. And the RCR, we are talking about easily 2008 per square foot. Where else the OCR is hovering about 2000. Okay. So today, right, if you are buying a property, so this is how we look at properties. The numbers definitely must make sense first, and it gives us a better indication what the numbers are. So if today OCR is already calling at 2000, close to 2001, today if you're buying a property at 2001 per square foot, it's kind of a normal lah. Okay, very average. Everybody is also buying around that kind of pricing. So there's nothing different regarding this situation. But if let's say today you are able to buy a RCR, which is averagely about at least 2006, 2005, 2006 to 2007 per square foot, and you are able to get at $2,100 per square foot, what will be your decision? All right. So like I said, today we are always looking for undervalue. We're looking for good properties that we can purchase, and the price plays a huge part. One of the safety net that we always build for our clients is to ensure that your purchase price in that location is not the highest. Okay. We cannot say that we will get the lowest, but you definitely do not want to get the highest. That is why today, if let's say we are able to buy a property in RCR at $2,100 per square foot, how many of you agree that this is actually very safe? Meaning we have certain buffer, because averagely for RCR, they are already calling easily from 2005 onwards, correct? Am I right to say that? So this gives you a good indication today if you're able to get a property. Later on, I'll share with you more examples about how the properties are being looked at later on. But this is very fundamental. Okay, this is one of the fundamentals that we will look at when it comes to property. And it's very important for us as homeowners to actually take note of all the prices in the marketplace, right? Okay, so then from there, from the general average prices, what you want to go in is you want to go in and determine each segment. Okay, how are the prices? So one of the biggest trap or mistake I see a lot of homeowners do is when they start comparing, they are not comparing the right properties, which is why they are always struggling to make a decision. They could be getting an older property to compare to a newer property, for example. So you're not using very accurate parameters to do comparison, which is why whenever you do that comparison, one property will definitely look a lot cheaper than the other because you're using an older and a newer properties to compare. Another mistake that I usually see a lot of homeowners does is that they will compare properties in almost different locations. So what do I mean by this? So I actually have clients when they were looking to buy an east side property, they will say that, oh, how come the east side property is so expensive? And when I ask them, where are they comparing to? They say, I also compare to the east, ma. So the property that we are looking at is about in the East Coast area. And then they say, the east side in Pasir Ris is so cheap. Why is it that I should buy an East Coast property that is so expensive? Although both are in the east, but there's a huge disparity in terms of prices growth also. So this is one of the biggest trap that I see a lot of homeowners are unable to make decisions is because they are doing the wrong comparison. So in our consultations with clients, right, what we do is we always want to build very strong parameters to compare that is relevant. Okay, we cannot compare orange to apple. We have to get as much parameters as we can to compare apple to apple. Does it make sense? So if we take a look at this average prices, right, we are talking about all the different new launches, right? You can see that today in OCR, which is mass market area, a lot of the new launches during this period has already crossed at least from 1007 all the way to 2001. Can you see? More than 2001, close to 2001. Okay, the averagely you can see the prices go from 1009 all the way to even 2001 plus. So this tells you that today the buyers are able to accept a price point around 2000 to 2001 in the mass market for the new properties, because these are all under construction properties, right? Yes. So even in Amor residences, you can see in Amokyo, people are willing to pay up to 2,100 plus. Even Lentor, okay, a leasehold property, people are averagely willing to pay at least $2,123 per square foot. So on average, we are giving them, okay, maybe an average about $2,100 per square foot. So this is the real prices out there that's been transacted. Okay. So then we look at Amor residences. If you want to go into more details, you can see that Amor residences, okay, they're all new sales and they're all purchased during the launches. You can see that their prices per square foot. 2001 is average. But if you really go into looking at the per square foot for the different sizes, these are definitely the two bedroom types, right? You can see that per square foot is at least 2003 plus, my friend. Oh, 2001 is just on paper, but because there's so many different types of properties, that are the bigger ones, the smaller ones. But if you look at actual price comparison, they are not even 2001. We're talking about 2003 onwards. Can you see this? So by going into details of each development, you'll be able to determine what is the average prices. And most people, when they are looking at, they only look at the newspapers, the headlines, when they say that, oh, this property launch was at 2001, and they think that all the properties there are average 2001. So this is also another big mistake that we generally see in homeowners making mistakes, which is why the one of the initiative why we run classes like this is also to let you avoid some of all these mistakes. Okay, you do not want to fall into a situation where you make mistakes when you're buying a property. Okay, so let us dive deeper into some of the OCR prices. So these are all the resale properties. Okay, resale. Just now was new property. So resale properties, when you start comparing, then you can see all the OCR prices for resale are already averaging at least $2,000 per square foot. And once you dig deeper, like seaside residences, you can see their prices are at least 2,000 to 2,005 even for some of the units for per square foot. So can you imagine if a resale property is already calling at $2,000 to $2,500 per square foot? Today, if you are able to buy a $2,100 per square foot in nearer to town, would it seem like a good buy? Okay, so later on we will study a little bit why is it that we are constantly able to help our clients find out good undervalued properties that is worth to consider to purchase for growth potential. So even Paranormal, you can see in Ang Mo Kio. So Amor, right? Just now we share with you the properties, right? Amor is really crossing at how much? You all can see, right? Oops. Okay, Amor is really crossing at least two. You see that they're per square foot. We're talking about also 1,008 to 2,000 plus. Okay, this is a resale property. All right, so resale property, having this situation, then you'll be able to ask yourself, like, hey, if let's say a resale is already calling at 2,000 plus per square foot, that means if today I'm able to buy something that is within that kind of price point, will you find that it is going to be safer? That's why understanding pricing is a very big deal. The research to pull out all these data and numbers is very important as a homeowner, whether you're buying for own stay or buying for investment. So now you have a good sense about how OCR prices are going to be. So let us study into the city fringe to do this comparison. So city fringe property, you can see these are all the new properties, okay, the new launch properties. And averagely, you can see what is their average transacted prices. Okay, we are talking about 2001 for Woodley residences, 2005 plus, 2002 plus for Avenue. It goes all the way to even 3,000 for Riviera. All these are still considered in RCR. But of course, RCR, you also cannot just take it as, oh, RCR prices. There are also different locations that you have to compare them so that they make sense, right? So is, for example, Riviera, you can compare with One Pearl Bank and Landmark, okay? Woodley Residence, you have to compare to the rest of it, like Park Colony or the Trevor. So you must know the different type of properties to compare and not just blanket party and say that, oh, RCR prices is averagely 3,000. If I can buy a $2,800 per square foot in RCR, meaning I'm very safe. That is also the wrong way to look into it. All right. So let us study some of the prices in details for RCR. So Leaf and MB, of course, this is in Arthur Road in the east side. You can see that the prices are going at least 2,005 plus per square foot average. Okay, 2,005 plus per square foot. Okay, and this is a leasehold property where it's in a very prime location, but people are willing to accept already at 2,005 to $2,600 per square foot. So this gives you an idea, like in the east side properties, if any future prices, would it be higher or lower than this price? That gives you a very good idea. So if we compare some of the resale prices around, you can see that their average prices, we are talking about easily already crossing $2,000 per square foot. Okay, we are talking about resale. That means these are all older properties. Older properties, you are having them as an average from how many years? 4 to even 10 years, some of them. Okay, for 4 to 10 years. But they are already crossing the 2,000 mark to even 2,200 plus per square foot in RCR. And these are all the RCR resale. Okay, so this gives you a good indication of, okay, now I understand the prices and on the different locations, different segments, how should we be looking into it? So one of the key things that I always share that there are the two critical factors, and one you have to write it down. The two critical factors are, the first thing, you must look into your safe entry price. Okay, you must definitely have a safe entry price when you are buying a property. And the second thing that you want to have is to ensure that you have a very safe exit. Later on, I'll share with you examples of how we actually spotted properties. But I want to quickly just run through with you a little bit of what is actually happening today. Okay, what is happening today? So as for every buyers out there, right, you may be just the same like my clients, Rachel and Edwin. When they are looking into properties, they are also having a lot of different worries. They're worried about their own resale property not growing, what to buy next. So there's always a lot of all these complications and confusion in the marketplace. A lot of noises out there that, kind of prevents you from making a right decision. And you yourself are so busy with work, with your family, you may not have the time to really research and really diving down on what to do. So that is why when they reach out to ask for some help in terms of the property plans, we sit down together, we consult them to advise them on a longer term plan with a projection of, even 5 to 8 years or 10 years, what potentially can happen. And this is what we do in our consultation with our clients in private. So we can understand what is your current situation happening and what kind of objective and plans you have for the future. Then we see how we can help you to execute it with properties. And that is what we do. So during this period, right, can you imagine that there were also trade wars going on? The interest rate environment was very, very high. Economy was not so good. Price was also very high, and cooling measures was around. But let me share with you when they reached out to us, right? This was actually back in 2018. Okay, 2018, let me flash you back into the 2018 period. What happened? Okay, and then you let me know whether does this have some relations of what is actually happening now. So back in 2018, right, if you can see, the price index is actually at the highest. Okay, if you compare in the past, 2018 was already at the peak in terms of private property prices. And you can see it very easily from the price index. 2018 was 7.9%. It has not crossed 7.9% before for the longest time. So during this period, am I right to say that this is considered a high price environment? Okay, this is a high price environment. So whenever there's a high price environment, everybody will be worried also in terms of prices, and then they hope that the prices come down. So it's very common as a homeowner and a human being to think that way. And this is not all. During that time, our China and US trade wars was going on. So it actually disrupted quite a fair bit in terms of our logistics, our supply chain situation. And during then, that's why our economy was also not doing very, very well during that period. So there was not very rosy, I would say, information and news out there. Okay, and this is not the only thing. The third thing that happened was also, we were also on a very high interest rate environment during the 2018-2019 period. Okay, I can remember it went up as high as 3.5 to 3.6% at one time, okay, for the interest rates. So if you look at during 2018, we also went through a high interest rate environment, and it's higher than so many times, okay, during 2018 and 2019 time. So interest rate, although yes, it's a factor because it will be impacting our mortgage and all our money payments, but this is not the only reason why you should or should not buy properties. Later on, we will discover a little bit. So back in 2018, the other thing that happened was our inflation was an all-time high. So a lot of us, we think that the inflation now is high. Yes, it's higher, but it actually went high before in the past, which is 2018-2019 period. So during that time, of course, we do not know what's going to come after 2019, right? We don't know COVID is going to happen. We don't know all these things. But during that time, if you were Edwin and Rachel, when you realize that the prices is high, inflation is high, economy not so good, there was trade wars going on, and then our interest rate environment was also very high, what will you think? Will you dare to look into properties or not? So usually a lot of homeowners are very worried whenever there are such things, which we understand. That is why before we make into any judgment, it's good to understand what is happening in the marketplace before we decide what to do. And that's not all. During that time, cooling measures was also reintroduced. Okay, cooling measures was also reintroduced. And this was the biggest impact during that. So how many of you feel that this is actually very, very familiar of what is happening in the past and now? How many of you agree that actually there are very similar situations that is happening right now as we are like in the past? So when Edwin and Rachel, they came into us, right? Our objective is what? Is to bring to where you are right now. So for them, they were having a 2-bedroom freehold properties. And the reason why they want to sell and then move forward is because they want to stay with their parents. So they needed a 4-bedroom. And that is where they want to be. So many of the times when they wanted to do from A to B, right, they were having a huge gap in between. There was a huge gap of understanding about the property, understanding about the market. So they were unable to make a decision until when we appear to bridge the gap for them. Okay, basically we bridge the knowledge, we bridge the market updates to them. So they feel more confident on what is happening. And we adopted the entire REI method to share with them what to do and how to do it in terms of properties. So eventually, let me share you an example what we did. Of course, we went through multiple rounds of discussion. We understand where their objective is. And most importantly is how can we help them to find a good property in a high price environment where it's still worth to purchase. Does it make sense? So today, how many of you agree that if today we are able to buy, like just now the example, if you are able to buy a $2,100 per square foot properties in the city fringe, where else your OCR, the mass market properties, are already calling at $2,000 to $2,100 per square foot, will you be safer buying that RCR property? That is what we are always looking at when we identify the right property for our clients. So let me show you an example right now. So when we were looking into our research back in 2018, we zoned into this location. Why? Because there were a lot of things going on. And later on, I'll share with you one of the parameters we use when we help you all find properties is also to look at transformation. Okay, so let me address that later on. Let me just give you this example that we zone into this area where Farrer Park area is. So when we were doing comparison, remember my friends, buying properties is not just about buying based on because you are familiar with it, whether you like it. It's also to understand the data and the numbers of the transactions. Very, very important. Because you may end up buying a very good property that you love so much, and you might overpay for that property without you realizing it. And you could be paying top dollars for it, and you're the highest in the marketplace. We are not saying that that is not possible for you to still buy. Definitely, it's still possible. It's just that in future, when you may want to exit the property, you may have some difficulties because you're already buying the highest in the location. Does it make sense? All right, so there are different parameters that we use to guide our clients in so that when they buy a property, they can buy into a safe entry and then they can also exit very safely later on. So let me show you this example that we bought it, we kind of zoned into this location in Farrer. And we were doing some checks and we realized there is a property called Carisdale that during in 2018, a 4-bedroom unit was already transacting at about $1,111 per square foot. So my friends, remember this is back in 2018. So which means this property is already at least 13 years. Okay, 13 years already, yeah. So it's a comfortable plot. You're also quite near to the MRT. So when we look at surroundings properties, we must always try to compare as similar as possible. That's why we can do a fair comparison. So another property that we spotted was also this property called City Square Residences. But this time around, you can see that, how come the property price went up quite a fair bit in terms of 1,507 per square foot? The reason why, because this is a freehold property. Okay, so freehold property tends to be at least about 10, 15, sometimes even 20% more premium than any leasehold properties around the area. And this property is already at least 10 years. Okay, this property is around at least 10 years. So we must start comparing all the resale properties. Why? Because today, if you want to buy properties, you must know what are the prices your surrounding are calling for. If you're going in blind without looking at the prices, then you will be in for a big shock. 3 years, 5 years, 8 years down the road when you want to sell, then you realize, hey, how come my property did not grow? Okay, so all these are very important factors. So another property that we kind of spotted out was Social City Lights, and this also been a leasehold property, very similar to Carisdale, all right, in terms of the size, number of units, and location. And this property is higher at $1,327 per square foot. The reason why this property can call at least about 100 plus or $200 per square foot is because it's younger. This is the youngest property around the area, and we are talking about this is at least during then was around already 11 years property. All right, it's one of the youngest property around the area. So this is definitely something that we have to make sure that when we are doing comparison, we understand what is the average transacted prices. So take note, when I say transacted, it's not asking price that you saw on Property Guru or you saw on prices somewhere else. All right, we always have to base on what people have paid for and not what people are asking for. So that's a huge difference. So during that period, this entire area, all the 4-bedroom units are calling around this kind of prices, and the size are also very, very comfortable in terms of purchase. So in 2018, we were looking out for properties. We were comparing the new ones and the old ones to see what kind of property is ideal to purchase in a high price environment, high interest rate environment, and always remember the economy during that time was not the most rosy. So anyone during that period when we want to buy properties, we are also very careful. So it's the same thing when we were doing comparison. For Edwin and Richard, they understand that they need to buy properties. So when we did a comparison, we spotted this location. We spotted this property. We spotted this property, Sturdy Residences. Okay, Sturdy Residences been a new property during then. So what happened is, when we spotted this property, the property still have 1 more year to go. 1 year to TOP. All right, so they were only TOP in basically 2019. So we were doing this research back in 2018. And we spotted this property still for sale. And then we realized that, hey, how come the property prices can be at 1,377 per square foot at 1.793 million? It is also a 4-bedroom unit. So today, my friends, if you have this kind of data to do comparison, which property do you think is more worthwhile to purchase? Will you go for A, Carisdale, which is already a 13 years old property, although it's the cheapest in terms of per square foot? Or B, will you go for City Square Residences, being a freehold, I want to buy this property and hold it for long? Or will you go for C, which is City Lights, at the same time because your per square foot is also one of the lowest? Or will you go for D, where you are getting a new property, 0H, at almost the same PSF as an 11 years property? So this is one of the reasons why for us, when we are doing our research, we are able to spot value properties, undervalued properties out there. And when we spotted this, we were sharing with them that, hey, this property is a very good purchase. Why do we say so? Because first of all, a 11 years old property is already transacting at $1,327 per square foot. Today, you are buying into a new 0 years property at almost the same price. If the next 5 years, if you want to sell your property, who will have a bigger advantage in terms of price point? Can you sell the same as what City Lights in 5 years now want to sell? See, so this is where we look at your safe entry first. Okay, your safe entry is always the most important, because once you can get a lower pricing than your surrounding resale properties, then you will be easier for you to exit. And this is not the only properties that when we are looking at, we were also doing comparison. And just nice, back in 2018, there was also another property, a smaller development, although it's a mixed development, which means there are some shops at the bottom. People already bought this property at Uptown at Farrer. You can see that this is a very small property. And people already paid for how much? $1,986 per square foot. Can you imagine? People already paid for this kind of amount, close to $2,000 per square foot. And people are willing to pay for it. Give and take, perhaps it's because of the MRT. The MRT is very near. But the question I want to ask every one of you here, based on these 5 different properties, today, would you pay $600 different? Because they are both new properties, right? $600 per square foot difference. So if let's say you have a $1,000, 1,000 square foot unit, right? You're paying 600,000 more. How many of you will feel that this is justifiable to pay just because I'm near the MRT? Would any one of us pay $600,000 just to be near the MRT? So that's why when we look at data and numbers, it's very clear cut. Don't ask me why people will go and pay $2,000 per square foot for the area. I also don't know. Okay, to me, when I look at the numbers, it just don't make sense. So unfortunately, this is one of the biggest trap a lot of homeowners usually make. And why do I say so? Because they will just look at, oh, I want to be near the MRT. As long as I'm near the MRT, I'm willing to pay. But they forgot to see how big of a premium did they pay for it. I'm not saying that when you're buying a property near the MRT, you shouldn't pay a premium. You should. But should it be so drastic of $600,000 or not, my friend? All right. So even if today we grab, we take from our property and then we grab to the MRT every single day, I don't think I will need 600,000 also lah. Okay. So that's why sometimes we also must be able to justify the sort of premium that we can go for. Besides just looking at, oh, because I love this area. Oh, this one here got MRT. Wow, I can buy a very high floor units. We understand those are important, but they may not be the most important. Okay, so today, if let's say you look at all these 5 properties, how safe do you think my client's property at Sturdy Residences is? Is it a very safe bet in this situation? Is it a very safe bet? Okay, so this is one of the way that we always help our clients to look at properties. And this is also a reason when Uptown at Farrer was launched and somebody bought it at $2,000 per square foot. And that's the reason why when Piccadilly was launched, they have to launch at least 2001. Why? Because they have to follow Uptown at Farrer, right? They cannot sell lower than Uptown at Farrer. No developer will want to sell cheaper than the earlier batch. They will always be priced more expensive. And that's the reason why those who buy at 2001 for Piccadilly Grand, can you see in these 6 properties, who will be laughing to the bank the most? Let me ask you, who will be laughing to the bank the most? All right, so when we look at this situation, that's how one of the way that we look into spotting a good location with the right entry price, a very safe entry price, so that your pricing that you're buying is not the most expensive in the location. And this is also a reason when Richard and Edwin, when they bought this property at $1,377 per square foot, the last we checked in 2022, already went up $1,781. So in just a short 4 years, right, they already accumulate, their property value already went up more than $500,000. That's why one of the key things you must understand is, regardless of any of the market conditions, whether the market is up or down, one of the key things you must always understand is to always look into looking at your safe entry price. Always. Only with a safe entry price property, whether the market is up or down, you are able to make a margin and build capital from it. Does it make sense? Okay, so very important. So even like, let me show you an example. So a lot of people are worried, oh, because 2018 was the high price environment, high interest rate environment. But yet those who bought properties during that period, you can see the amount of profits that they are able to actually build. Okay, so it's not about, today, high price environment is against me. It's not that way. The way that you look at it, if only a high price environment, then you can make money, then you are speculating. Also for us, we always a little bit more careful in terms of data and numbers. So we want to enter in a very, very safe pricing and force your affordability as well, whether you can hold this property or not. So even the same thing for this property in Shinfu. Okay, just skip. You can see the prices. They bought it also 2018, but yet the profits are massive. So this can also happen to you if you allow yourself to understand property a little bit more. And because when with land prices keep increasing, you as a homeowner, I will believe it's all our duties to also have a sense about how the prices are like in the past and moving into the future, so that you have a good grasp about what is happening. You cannot just, hey, I stay here, I don't bother. It's okay. Even if you come on board here to learn this live every single week, I'm sure your understanding about property can increase over time. Right, so one of the key things why we always say that is because for land cost has always been increasing. So we understand that Singapore property land costs, land are scarce. That's why prices keep going up. And if you can see, only back in 2017, when Treasure at Tampines was actually bidded, the land. You can see that their average per square foot per PPR break even is about $1,166 per square foot. Their break even. And that's where we will calculate all the costs from land, construction costs, professional costs, taxes to the government. So averagely, your per square foot is about 1,166. And this is just back in 2017. But moving forward to 2022, properties in Lakeside that was sold, that means the developer purchased, you can see how much their break even has increased. Can you see? It went up almost double already in just a span of 5 years. Why is this happening? Because land are very limited in Singapore. Nobody will definitely buy, the government will definitely release the land at a cheaper price than last time. They will have to increase the prices to make it makes more sense. So today, if a break even for lakeside residences, and we are talking about, if let's say it's a $300 per square foot, it's only a $15 per 15% profit only. You will sell at $2,600 per square foot. So my friends, moving forward, lakeside property will be easily $2,300 per square foot, or even $2,600 per square foot, depending on how much profit margin they want to make. So this is also another example. And of course, this data, when we have this, when we did this was 2022. We were anticipating, okay, because dairy farm, there was a land in OCR that was sold for $980 per square foot per PPR. So you all know the formula, right? If you just times 2, that should be the average per square foot. So we were estimating the property to be sold at about $1,900 plus to $2,000 per square foot for the land in dairy farm. And of course, it's called Botany, if you have realized and followed the property launches. Okay, so this is our estimate back in 2022. Let us take a look at how much average they actually was sold for. So this was in March 2023. They sold an average about $2,070 per square foot, which is why when we do our sums in terms of breakdown for developer costs and how much they estimate going to sell, we are very accurate in that sense because you're using data and numbers to decide. So now you can see for dairy farm area, which is near to Bukit Panjang, people are able to accept buying properties there at $2,000 per square foot already. If you look at Tanah Merah, people are also able to accept at $2,000 per square foot. So my friends, if today you are keep thinking that all these prices are very high, let me share with you a real truth. Okay, this is tough love, okay, for you guys. Okay, please accept the new benchmark prices. The faster you can accept all these new prices, the better and faster you can make a decision on how you want to capitalize on all these upsides for your property. Because even Kara Hill, this is Pasir Panjang area, their average prices already went up $2,650, my friend. And this is, of course, a freehold property. That's why you can see a difference, right? A freehold property and a leasehold property, there's always this 15 to even 30% premium tagged to a freehold. And because we study prices a lot, we study the numbers, we do the research. So even for some of the properties like Jalan Tembusu, right, they already sold this land. Okay, they already sold this land and it was already launched. So you just imagine today, their winning bid is about 1,300, which means they should launch about 2,600 plus per square foot. All right. So this is our estimated launch, about 2,400 plus. This is what we anticipate they might be looking at this pricing. So what is the Tembusu Grand average per square foot? Average 2,400 plus. Okay, they sold almost half of the units and Tembusu Grand. So that's why when we are looking at data and numbers, it's not about just guessing. And why do I emphasize a lot of research data and numbers? It's because the numbers cannot lie. Okay. And when we are looking at properties, if we are just basing on our gut feel, we are second guessing ourselves into buying it, then the chances of us making mistake is very, very high. So why do I want to create a channel like this? Why do I have a community like this? It's also to equip and empower homeowners just like you who are busy with your work to know some of all this knowledge. And at least you have a channel to come to if you seriously need help in your property to make a decision, an informed decision this time now, and not just based on, oh, I think this property can grow. I think this property very good. You know, there's a lot of I think, I feel, I thought situation, right? Which is very risky. because properties are a very big ticket item, right, my friend? So with a big ticket item, the worst case is that if you make a wrong mistake, you potentially be losing hundreds of thousands of dollars. That is the worst case situation. But since now you have this channel that can help you bridge the knowledge gap, you may want to really learn along the way and reach out to us whenever you find that there's something about properties that you really want to do and you're worried that you may be doing it wrongly. Speak to us and my consultants, my team, so that we can actually help you get better clarity so you can make an informed decision on what to do next. So one of the key things, right, as we are looking at the prices just now, right, now you can see a huge difference, right, by seeing properties with prices, with numbers, and without. So there's a huge disparity if you are doing it correctly. So that's one of the reasons why we always advocate our clients to really dive into the numbers. Of course, we will do the research. We will provide the resources of the data and numbers to help you and your family. Another thing that we usually do is we always find out what are the key considerations for a property. And we are very, very strict. Today, when we are finding a property, any properties for our clients, right, we have very strict criteria. And I just want to run through some of the criteria very quickly to share with you. First is, of course, the location. But location is just one of the key things, because the second most important thing you must always go for is to look at a safe entry price. Later on, I'll share with you the relation between some of them. Because safe entry price, right, has a lot to do with your rentability and rental yield. Okay, maybe today you tell me, Edmund, I'm buying for own stay. Why do I need to look at rentability? You must understand today, whatever you buy, there is also a high chance you may want to sell it. And when you are selling it, you do not know whether the buyer is buying for own stay or perhaps for investment. So without you, whether you like it or not, you also want to make sure that the price that you're buying and the rentability is good. So it gives you a better opportunity for you to sell off your property at a good price, at a high price later. The fourth thing that we always look at is transformation of area. That's why these two areas, location and transformation of area, are they are together. They are connected very, very closely. And today, if you are choosing the wrong type of location, of course, location, when I mean wrong type, it doesn't mean that it's a lousy location. It means that you did not maximize the potential of the location when you should. Because 90% of us, when we buy property, right, do you agree? When we buy is based on maybe where we are familiar with, where we have stayed before, or perhaps it's near to your workplace or near to your children's schools. And that's the reason why we buy this property. But whatever happening around that area, you don't know. The prices, what's the pricing like, what's the safe entry, you won't know, because your decision to buy the property is based on different factors. So my role in a consultation with you is to start letting you see that some of all these other perspectives of how we look at properties. Okay, so you definitely have your A way. So how about see it from our B way and see from this perspective and how we can actually merge both sides of discussions together to help you better for your decision making. Also, so very important for location and your transformation area. Because why? Because today you must understand transformation of area. If you don't understand this, you may be losing out on huge opportunity that may be happening in your location just because you do not know about this information. So I want to share with you some of the urban transformation criteria, and I want to stress a lot, my friend. Today, if you are hoping for your property price to grow because you are staying in that area, hope is not a strategy, my friend. Okay, so when we are helping our clients to make sure that they are able to purchase at a safe entry price and a safe exit, we are looking at a few factors that has growth potential. Okay, if the areas must have growth potential so that your money can work harder for you. Does it make sense? All right. Of course, you can choose to stay where you are. But if you want to add on another level that you can be almost guaranteed and always be very sure that your property can grow in terms of capital, then you need to find areas where there's transformation. Very important. And when we mean transformation, we're not saying that, hey, there's new properties building beside me. We're not saying that. We're saying that there's a lot more factors, and I just want to quickly run through this. The first thing is relocating of existing assets. I want you all to write it down. Okay, relocating of existing assets. Why do we look at this? Because when there's a certain relocation, the area where they relocated to will always have a huge transformation also at the same time. An example I can give you is our Tanjong Pagar Okay, our Tanjong Pagar port is moving to Tuas. So which means Tanjong Pagar port area, once they are moved out, there will be a revamp, right? They will be having new developments, new transformations there. So areas in Tanjong Pagar area will also see a boost in terms of prices in time to come. And that's only one part. The second part is those properties around Tuas, will we be seeing more properties? Because now there's a huge there's a huge demand of people may want to buy properties or rent properties nearer to Tuas, which means we're talking about the Jurong area, Jurong West area. So areas in those areas, will we see a climb in terms of prices? Will we see a climb in terms of supply? Definitely, because of a transformation situation. Another one that we can study about transformation that has equivalent to growth is always new townships. So the latest township that we have is Tengah, that is upcoming. And of course, before that, we have what? Bidadari. Okay, with Bidadari. And of course, the oldest one is Punggol. Okay. So if today you can understand new townships, right? What are the other few townships that may be coming out that if you want to really access and capitalize on the high side of transformation, you may want to also know where are the new townships that's coming up that you want to kind of spot it earlier. And this is what we do for our clients when we help them to spot properties. Third, improvement to heritage and recreation spaces. Let me give you an example. The Real Way area, right? It has been fully transformed. During COVID, there's more people looking out for areas with all these recreational spaces, which is why dairy farm areas suddenly see a huge boost because it's near the nature reserve. It has a very comfortable space that even if you are staying in a very small unit there, you can come out to the nature very, very easily. So we are seeing that the improvement to heritage and recreation spaces are getting a lot more people to start exploring this possibility. And if today you are buying into areas or into a property that has this kind of instruments, right, your property prices will also go on a high side, will also grow. Of course, one of the most common one is your business centers and commercial hubs. And this one, basically, you won't go wrong. So I'm not going to touch too much about it. The only difference is that right now, our business centers and commercial hubs has also shifted already. So today, if you just think about, oh, today I must go and buy into Marina Bay, I must buy into Orchard Road, I must buy into CBD area, Shenton Way, you'll be in for a surprise that for the next 10 years or even 15 years down the road, there are other areas of business centers that is worth to consider for growth potential. Okay, so the last one is, of course, your upgrading of your existing infrastructure. And mainly this is to talk about your MRT, your transportation. Today, you will want to get yourself near to an MRT. Okay, 10, 15, 20 years ago, when people ask about property, they will always ask this one question: which MRT stations is this property at? Correct. This is how most people do it, or which MRT station is this property at? But fast forward today, right? I can tell you these questions will not be heard so much already. On the other hand, we will hear a lot is how many MRT stations this property is near. Does it make sense? Because as we have built more MRT stations, more different connecting points, in future, your MRT, if they are not even near one MRT station, right, yours is considered the lowest tier in terms of performance really, because there will be a lot of other developments. There may be 2, there may be 3 different MRT connection points that they can go for. So this becomes another major factors for your own value of property in future. Does it make sense? And of course, one of the most importantly is that we always want to use real estate statistics to guide us on how to find opportunities. Okay, so today, if you're blindly going in, then of course, your property value of growing is based on guessing. Or if you strike it, means it's luck. Or for us, is we want to use data and numbers to really project what are the opportunities out there by using real estate statistics. Very, very crucial. So here I want to just give you an example, right? On one example of how a property can be searched for. And this is a real current there's still a property like this at the moment. So today, if you are looking to really, park some of your money and re-enter the market, you have been struggling with yourself to buy the right property, to choose another value, this could be a good case study for you to reference to. But of course, I want to stress, not everybody is suited for this property. Okay, I'm using this as an example only. So it's best that if you really are looking for a property just like this or something similar, work with us so we are able to really calculate based on the affordability, your finances, and your capability, what we can do to help you, maximize your potential in terms of a property. So I want to first of all just draw your attention to in a downtown area, okay, in area with the city center. So one of the locations that we spotted, right, for our client is because this location is very near the river, it's also within the city, and you're also by the park. So there's always these few elements. And today, my role as a consultant to help you find properties is to layer it up. Okay, we want to layer it as many factors as possible that gives you the edge over other people, whether in terms of your price, whether in terms of location. There are different things that we want to stack it up. So at the end of the day, today, my friends, you're not just buying a property. Today, when I help you to buy a property, is to help you to look at how you're going to sell your property in future as well. So when we buy, we always have the intention of how this property will be seen when we are selling it as well. So we want to stack a lot of positive factors into your property. And of course, later on, I'll share with you how we do comparison in why this property makes a lot of sense when it comes out to numbers. So in Singapore, there are only three different three different MRT that has three different connecting points. All right. So as I mentioned, one of the key transformation situation is your accessibility, right? So MRT becomes one of the most important thing. And today, if you have a property, there is three connecting points, three interchange, will you perform better than your neighbors? Will your property be more desirable for future buyers or future tenants? So these are all what we do in layering the different factors. And of course, in this location that we're going for, we are also very near the future Greater Southern Waterfront. Okay, future, when I mean future, meaning it's really the future, beyond 2040, okay, 2040. But are we going to hold on to this property for so long? May not be. But at least there are stories. There are upgrading and transformation plans, of the Greater Southern Waterfront that today, if you are able to tap on these resources, you are also able to grow a very comfortable profit from there. So let us dive deeper into it. And one of the locations that we spotted, right? Of course, this is just one of the properties that we spotted that is great. And one of the reasons why I want to share with you this is because perhaps some of you are really having troubles finding the right properties to buy. And you want to capture current situation where there's a huge opportunities out there to enter the market. But you are just kind of lost, like there are so many good ones. Everybody say every property is good. So which one is good for you? So that's why we do deeper understanding to run through your objective, your timeline, what's the affordability like, how should we buy this property. So there are a lot of different factors that we work with you on a personal basis to guide you on your property journey step by step. So one of the locations that we zone in, right, is this area where Outram is. Okay, why do we choose this location? It's because Outram is undergoing a huge mega transformation because they are turning their entire medical area, right, into a medical campus. Okay, so it's a mega things. And if you drive right now to Outram, you'll be able to see there's a lot of constructions going on. And this plan already has been undergoing and it's a 20 years plan, my friend. It's a 20 years plan that SGH has installed. So let me ask every one of you here today, my friend. Today, if you know that there is a huge transformation in this location, do you think government will also not do mega changes to the roads, to the facilities, to the areas, so that they can upkeep the SGH 20-year transformation? And with transformation going on like SGH, are we expecting more demand in terms from nurses, doctors, maybe even students or professionals who are working there to also start looking in these areas to move to? Okay, so that is why I always share that in my classes, right? Singapore is very smart. When we build our urban planning, we always ensure infrastructures are there first. Infrastructures like MRT lah, shopping mall lah, all these things are already building in sequence. Then we build properties. Okay, So when we know that there's infrastructure there already, the properties will come next. Would the property be riding on this initiative and this initial transformation, like for example, SGH? So SGH is the infrastructure that goes in. Because first you can see the MRT is there, then infrastructure goes in, right? Then the next thing will be property already. And we can see this very clearly from where? From the master plan. Okay, we study the master plan very deeply, especially for our personal clients. And that's how we are able to help them to monitor what kind of properties are good to purchase or not. So let me just give you an example. Why we zone into this property, this area, is because we see that besides just the Greater Southern Waterfront, okay, SGH transformation is definitely a big draw. And we realize there are a lot of different white sites. Okay, there are white sites around this entire Outram area. There's also the rail corridor that is going to be connected. And most importantly, there are a lot of residential sites around that has yet to be developed. Okay, remember just now I shared infrastructure first, then property. Later on, I'll share with you more details. So when we study an area, they have to fit certain price point, certain checklist. If not, we just blindly go in. And when we start looking deeper into the master plan, we realize today there's only 2 plots of residential at the moment, mainly landmark. Another one per bank. I'm sure that these 2 names are not foreign to you. You'll be hearing them for the past couple of years. But the question is, today, can you see how many other sites are they left? The brown, the orangey color sites are all the residential sites. So you can count. We have 1, 2, 3, 4, 5, 6, 7. And these are all zoned already under master plan that Singapore have the intention to develop these 7 sites. The only thing we do not know is when are they going to be launched for sale. But I can share with you, this is my own theory, because we have been studying urban planning for so much, right? So if SGH plans is going to be completed at least by 2030, and by then, are we going to be expecting a huge supply of demand of nurses, doctors, professors, students and all? So in order to keep up with this demand, do you think the government will start releasing the plot from maybe before 2030 is up? They will start releasing the plots to be built, right? Land, releasing land out to build more properties. Correct. So this is how the government does it. They will not release everything out at the same time, definitely. But what does this mean to you as a homeowner? Today, if you have a first mover advantage into this location, and there are 7 new more plots coming up, what will it do for your pricing if today you're buying at the lowest? You can enter it further. So I can almost, from our research, right, to tell you that today there is a plot which is Hotel Re right now. Their lease is up in 3 years. That means 2026, their lease is up. I can almost smell it that this will be the first plot to be released for land bid. Okay. So today, if you know that there's going to be another plot potentially, like I said, this is more of where we study. This is how we usually see urban planning. Would you want to purchase either landmark or per bank first, so that you have the first mover advantage? You are capturing at a lower price, because can you imagine if 2026 they start launching the land, would it be more expensive than landmark and per bank? Does it make sense? So of course, this is one of the key criteria that we use when we are looking out for properties. Then of course, when we start studying, we have to go in deeper. Okay, we go in deeper into the prices, whether the city fringe, at the city centers, we need to do comparison. So for example, right now, right, if I just show you some numbers, today at Riviera, right, their property prices for a 2-bedroom is already crossing $3,000 per square foot. And this is near Great World at city center. So we are all very near to the city. One per bank, their 2-bed and 1 bath is already at least $2,900 per square foot. People already purchase. Today, if let's say today you are able to buy one of the property at $2,800 per square foot at the landmark at below 2 million, will you think as a comparison, is this a safe bet? Okay, because don't forget, Tembusu Grand already selling at least 2,400 plus per square foot to 2,500 to 2,006. And if you talk about city fringe, away from the MRT, away from city, for Live and MB in the east side. Sorry, this is Live and MB. Live and MB is this one. Okay, so let me just repeat. Live and MB is going at 2,800 plus per square foot in terms of prices, and you're about 5 minutes walk to the future MRT. Whereas for Tembusu Grand, it's already at $2,500 plus per square foot, and you're 10 minutes away from the MRT. So if you do comparison like this, you'll be very clear to see, hey, today, what property stands out the most. And when we do comparison, we don't just do this. We also do a bigger picture to really understand how prices are. So I cannot stop emphasizing that today, if you want to buy the right property, you have to start looking at numbers. And what we do for our clients is to do research like this, so that once and for all, when we look at the prices, we know which property is worth for us to consider to dive in more. Does it make sense or not? I hope that you guys are learning something here. I hope that you guys are learning something. All right, so this is very utterly crucial to make decisions for property. Because today, based on city center, you can see that the prices are already crossing 2,009, 3,000, 3,000, 3,000. Even the M is 3,000. Everything is at 3,000 or even 2,009 plus. But today, if you're able to buy a property at 2,008 plus, wouldn't it makes you a safe bet? A safe entry, correct? Your entry is very, very safe. So this is definitely one very crucial factors to ensure that you do not buy into a price point where it's too high that you cannot exit. Because averagely, today, what is the average pricing that we can see? That in future, prices for CCR are going to cross 3,000. RCR is going to cross 2,006. OCR are going to cross at 2,001. So today, if you are able to enter a property at the right safe entry and exit, it will give you a better assurance and confidence that, hey, today you do not need to rush to sell off your property, even if any happens. So let me give you an example. RCR right now, for average, people are buying about 2,008 plus. Okay. And today, the city center, okay, city center prices are already going at 3,000 for their 2-bed. City center are around 3,005. Today, if we are able to buy a property at 2,008 plus, which is also very high floor unit, you are still buying at a very early stage in terms of pricing. Most importantly, you are near to city center. Very important. So if you want to exit, right, in future, can you imagine the city center will next time sell at how much? If let's say I just use a $250 per square foot, they have to sell at $3,250 per square foot in future. Correct? 3,002 ma. And for the RCR, they have to sell at least 3,001. Okay, 3,100 plus per square foot. And if you are able to buy this star buy, value buy that we spotted, you do not need to sell so high. You can just sell at close to $3,059 per square foot. You would already make a profit of $250 per square foot. You do not need to sell higher than other people. You can just sell slightly lower than them and you can exit. And that's why when we spotted this, we realized that, hey, today, if I can get my entry price as low as possible and other people are much higher than me, my exit is also very, very safe. Does it make sense? Okay. So one of the key things that why we spotted this property is also, I'm not sure whether how many of you understand about the shoebox curb in the central area. Today, if you are buying into the city area, there are a lot of restrictions right now because the government do not want too many shoe boxes, the 300 plus square feet, 400 plus square foot sizes anymore. They want to what? Ensure that there's a curb of at least 70 square meters. Of course, it will not be all the properties, but minimum, they want to build at least a 70 square meters. So what does 70 square meters mean? 70 square meter means today, if a buyer wants to buy a 70 square meter, is 753 square feet. And this is the minimum size in future. Today, you are buying at $2,800 per square foot. Example. In future, If you want to sell, you're selling at $250 per square foot, perhaps. And if let's say we are talking about these are the new measures based on the guidelines, the next land, if they launch, they will sell at about $3,200 per square foot. So that says we just use a very simple calculation, ground floor unit. A ground floor unit, because of the size increase, your quantum also increase at 2.4 million. That means minimum anyone who wants to buy a property near in central area in future, for a 2-bedroom, you need to have at least 2.4 million to buy. And today, if let's say we use a per floor just to jump 8,000, if we can jump 23 floors up, you will need to pay at how much? 2.593 million. Versus I can buy a property at 1.9 million. Which one do you think is safe to purchase? And this is just based on this one guideline because of the comparison for minimum size. And when we do comparison, that's what we do. We look at a lot of different factors, policy changes, numbers, whether there's adjustments in terms of the policies to help our clients better their property decision making. So when we look at it, besides the per bank and the landmark, these two, we find that, hey, the location has a lot of upsides. And not only that, we also start looking at layout. We don't just look at, oh, because this is a good, maybe there's something not so good about their layout. We will also dive in deep into understanding what are the layouts, how is it layout, is it odd shapes, are there any wasted spaces? So we will start studying also into layout to determine whether this property is worth to consider to buy. Why do we study layout? Because today, what you buy is how you want to sell. So we also must also study how the layout so that we can sell in future when it becomes a resale. Does it make sense? All right, so we have a lot of consideration thoughts before we even start buying a property. And that's the reason why our clients will follow us ever since 2009 until today in terms of going into the property market. So this is based on your exit. And then we also want to study one of the factors is your rentability. Your rentability in the areas, how can we look into it to decide, like, okay, today, if let's say I buy, can I stay? If you don't want to stay, can you rent it out even? So you have more flexibility and more options to decide what you want to do with a property. The last thing you want is that you are so limited with your choices, right? That today you are just, you'll be forced to sell at a certain time because first of all, you may not have the funds, all right? Or you may be looking at, today because my property against the other property is not so good, I want to quickly sell my property away and my rental is so lousy. So we do not want to be stuck in this kind of situation. We want to have multiple flexibility in terms of our options. So one other area that we look at is rental. Okay, so the closest comparison in terms of rental is Bollywood's residences. It's about 15 minutes walk to MRT. Okay, let's look at the transactions so far in the area. You can see they are already renting their 2 bedrooms, 5,000 plus, 5,000 plus, 4,009. All right, so there are 2-bedroom units, and this is an older property around 10 years old already, are already fetching at least 4,000 plus, and they are so far away from MRT. Today, if you can buy a property that is nearer to MRT, do you think you are able to fetch a higher rental? Because right now, people are asking even the 1-bedroom at 4,005, my friend. 2 bedrooms, people are already asking for 5,003. Some of the 2 bedrooms are people asking for 6,000. So today, we are not saying that you need to ask for this kind of rental because the property is not ready. But by the time when it's ready, it's new, it's nearer to MRT, and you're on a higher floor, are you able to fetch a certain premium as well? So we are very careful in drawing down the expectations. We don't want to call for everything can be so good. I will always draw the worst case scenario to help your study. So even Dorset's residences, of course, this one is by the main road, but of course it's by MRT very near, but it's very noisy along the main road. People are already asking their 2-bedroom at 5,009, 6,000, even 6,005. So that, which means in this area, we're talking about the average pricing should be about $5,000 to even $6,000 for rental. And these are all older properties. Okay, Dorset itself is already at least 10 years also. So a 10 years property, if can fetch 5,000 to 6,000, what if mine is a new one with better facilities and all? And one of the reasons why we choose this property for our client is also because you're on the very high above 20th floor properties. Your frontage, your view on the north-south facing is spectacular. Okay, and this is why this is also one of the reasons that we want to layer a lot of factors, a lot of positive points into your property, that it makes it so desirable for the next buyer to also buy your property, because your price is great, your location is fantastic, your view is marvelous. That is one reason. So I also would like to also ask every one of you here, since you are here and you maybe have been following my channel for a while, you've been listening in out, and you stop short of, reaching out to us. So I really want to be a little bit more proactive to see how many of you here in my channel that has been following me, you really want to seek help in terms of property, and you really want somebody to help you build a personalized property plan. You want to get all the resources you need in a shorter period of time, so you don't need to go and figure out whether whatever you are reading online, whether you're watching YouTube, is it correct or not. You can get all the resources with me and my team in a very short time to help you make better decisions, because we are using research data and numbers to guide you into the correct direction. So you must understand, my friend, every single families, we have different situations. We have different property plans. So you want somebody to really work out with you about this information and to decide how you should be planning for your family's sake. So that's why you want to really help you to make an informed decision for you and your family. So I really want to do this reach out as a proactive reach out, so that many of you who have been following my channel, and I really appreciate that, and you guys have been liking my videos, watching my videos, and I really want to reach out to you guys and say that, hey, if you need help, I'm here for you guys with me and my team, because I want you to become your own success story through properties. Okay, we have done hundreds of families to really help them understand property better before they move forward with their plans. And this is very important. Because why? Because we are using the REI method to review your situation. So the very first step we always do is to review your current property situation and to determine how's your property performance like, what is going on, what kind of objective and plans do you have in mind moving forward in the next 3, 5, or even 8 years down the road. And then we will definitely study together. My role is not to just tell you what to do. Okay, my role is to facilitate, meaning I will provide you all the necessary information, the knowledge that you lack, and then we can do a proper discussion to keep you up to date in terms of property understanding. So if you have been watching my YouTube and you've been watching all these videos and you still cannot make sense whether are they relevant to you or not, then this personalized consult is something that you may want to reach out to us, and we can actually help you see clearer in your situation. And when we evaluate, we get you up to mark in terms of what the market is happening, what the Singapore plans are for the next 5 to 10 years, so you can make a logical decisions on what you want to do before we identify the right property to purchase. Does it make sense? So we do this $1 million one-on-one personalized consult to a lot of our clients. And with this, we have transformed thousands of families out there from not knowing what to do in their property to know and do even better for their family situation. So I just really want to do a very quick run of what is covered in this personalized consult. And if you find that this is something that you really need help in, reach out to us in the different ways, and we can see how we can actually work together with you in your property situation. So the very first thing that we will do is, of course, you'll be part of our very inner circle where we do a lot of trainings, coaching in terms of mentorship to guide you in terms of our personal consult. The second thing we will do is we will do an onboarding. All right. So this onboarding is when you find that, hey, maybe when you reach out to us, we'll be able to guide you and understand what is your current property situation. What are the challenges you may be facing? What is it that is stop you from doing properties? So we can understand better. I can understand better of your current situation. And from there, I will get on a strategy call with you personally. And this is the only time that you maybe have access to me and speak to me personally. And that's where I will be able to digest what you have shared, what can or cannot be done for your situation, and provide you the right solutions that we can move forward with. So once and for all, you do not need to second guess, should you or should you not. Through this strategy call, I'll be able to tell you upfront, is it safe for you to do it or not? Is it too risky for you to do it or not? Or instead of you figuring out yourself. And when you are a good match with us and we can work with you to partner with you in your property journey, And that's where we will start the full review of your current property plans, your situation, and your objective. And then we will definitely have to evaluate your asset if you currently own a property, as well as your finances. This is very crucial because with the wrong financial sums done, you may end up doing the wrong approach in terms of a property. That's why we always want to make sure that we run numbers. And when the numbers tell us that it's safe, then we move forward. If it's not safe, we better don't. Okay, it's very, very risky. And then after everything, then we will go and identify the right property to purchase. See, whether you need the time to sell your property or to purchase a property, all these things we will do it in this $1 million personalized consultation. Not only that, we will also support you regularly with our support team. Support team means what? We're talking about lawyers. We're talking about our bankers. Even for our defect checks, we have our ID, our handyman, all these resources that we already have been using for the past many years by our thousands of families out there, right? They are also tapping on this resource of ours so that they will not need to go and figure out what to do and how to do it. Not only that, we also do a regular review for you. So what does a regular review means? We always believe property has a huge connection to our lifestyle, of how our family is. Meaning, perhaps you have an increase in terms of income, then your property situation may change. If you have another family members, your property situation will change. If let's say today your kids grow up already and they start going to schools, this will also affect your property situation, which is why every 3 to 5 years, we will review together with you based on your current property situation. Could there be anything change? If there's anything change, then we want to what? We want to come in and see whether there's something that we should structure in terms of property so that we can stay relevant. Does it make sense? All right. So the total personalized consult will be valued at $70,000. Okay. But of course, my role here in this channel, in this community, is to value add to you to see who we can help most. All right. So what we do is every single week, we can only allow maybe about 7 new families to work with on this personalized consult. We give a lot of attention time to you to find out what is happening so that we can help you progress in this situation. And what we are offering today for all of you who have been following this channel for the longest time, we want to offer you guys complimentary consultations to see whether are we a good match to work together. But of course, this one is on a case-by-case basis. It's by application only. So like I say, we cannot handle every single one. But every single week, we will have 7 new families to come on board so that we can work with them on a more closer basis, more personalized basis. Okay, that's where we can uncover some of your objective, your situation. We want to let you get clearer in your property plans before we start doing the property journey. All right. So like I say, whatever that you're getting here is our way of paying it forward. The reason because we have seen so many people who have made mistakes in property by not having the right knowledge, right resources. Okay, it's our way of paying it forward. And we want to make sure that maybe you have been in the blind for the longest time. You do not know what is happening in your property. Let this session perhaps help you to move forward in your plan. All right. So here's what you need to do just to get started. You can scan the QR code. Like I say, everything is complimentary. Once you scan the QR code, there's a series of questions you can help me to fill it in. And once you fill it in, the team and me, we will get in touch with you to organize a strategy call together with me. And that's where I will maybe clarify some of the things that you put in. Maybe there are certain things that I can help you with. I will always do it on the call so that we can move forward and see whether can we help you or not, and we can have a good match. So scan the QR code. I say we only allow about 7 new families every single week because we want to give you more attention time. And if you do this, I can guarantee you will once and for all have clarity in terms of your property situation. All right. So that's all I have for you. And do stay tuned for every other week because we have different situations of the properties that I will continue to share with you guys. And most importantly is that, give me a second. Yeah, so most importantly is that from here, moving forward, there may be changes in policies. They may be changing in terms of the property market. And I will use this channel to share with you guys on what is happening. And if you have any questions regarding this session, regarding the property market, feel free to always reach out to us and we'll be more than glad to guide you about your property situation. better. All right, with that, I shall see you guys in the next week session, and I keep you guys posted of what am I supposed to do. Great. Thank you so much. I see you guys real soon. Cheers.